Have you ever wondered if you can get rich trading penny stocks? Those super cheap shares that cost less than a cup of coffee and sometimes make overnight millionaires? Penny stocks are shares of small companies that trade for under $5 per share, often even below $1. They're usually not listed on major exchanges like the NYSE or NASDAQ, but instead on over-the-counter markets, often called the OTC markets or pink sheets. Because these companies are small, their stock prices can move wildly. A few cents up or down can mean a huge percentage change. That volatility is what attracts traders, and also what makes penny stocks extremely risky. They can offer massive potential gains, but also massive losses. People are drawn to penny stocks for one reason: huge profit potential. Imagine buying a stock at 10 cents and it rises to $1. That's a 900% gain. But here's the catch. For every success story, there are hundreds of traders who lose everything. Many penny stock companies have little revenue, no proven business model, and sometimes even fake hype designed to lure in new investors. That's why doing your own research is absolutely critical. If you're serious about trying penny stocks, start small and smart. Open a brokerage account that allows OTC trading. Platforms like Interactive Brokers, TD Ameritrade, or E-Trade support penny stock markets. Start with paper trading. Use a demo account to practice without risking real money. Learn to read financial reports, watch the volume and liquidity. You need enough buyers and sellers, otherwise you might not be able to sell your shares. And remember, always set a stop loss to limit how much you can lose. You don't need a lot of money to start. That's one reason penny stocks attract beginners. Even a few $100s can buy thousands of shares, but that low entry cost can trick new traders into gambling. Just because a stock is cheap doesn't mean it's a good deal. Sometimes it's cheap because the company is in trouble. So think of penny stocks as high-risk lottery tickets, not safe investments. Most penny stocks trade over the counter, not on major exchanges. That means they're listed on systems like OTCQB or OTCQX, which have higher reporting standards, or pink sheets, which are less regulated and riskier. You can access these through your brokerage's OTC section. However, always make sure your broker is legitimate and regulated. Scams in penny stocks are very common, especially pump and dump schemes. A few famous penny stocks have made people rich. Monster Beverage once traded for under 10 cents in the early 2000s. Sirius XM Radio was trading around 5 cents during the 2008 crisis before rising above $6 years later. Plug Power and True Religion. Jeans both had explosive growth from low prices at one point, though they later fell again. These success stories are rare. For every one of these, there are hundreds of companies that never recover or go bankrupt. That's why penny stocks should only be a small part of any portfolio. The truth? Yes, you can make money from penny stocks, but it takes deep research, emotional discipline, and a willingness to lose what you invest. Many traders are drawn in by hype on social media or newsletters promising the next big thing. But real success comes from analyzing fundamentals and avoiding FOMO. FOMO stands for fear of missing out. But FOMO often leads to bad decisions, such as buying too late when the price is already high, ignoring risk because others are hyping it up, following trends or tips without research. In investing, it means the anxious feeling that you're going to miss a big opportunity. In short, FOMO makes investors act emotionally instead of logically, which is one of the biggest reasons people lose money in volatile markets like penny stocks. In short, FOMO makes investors act emotionally instead of logically, which is one of the biggest reasons people lose money in volatile markets like penny stocks. If it sounds too good to be true, it probably is. So can you get rich with penny stocks? Technically, yes. But it's a high-risk game where most lose more than they win. Start small, educate yourself, and trade responsibly. And always remember, never invest more than you can afford to lose.